Yeah, that's a great question. So within the big technology companies, I'll break them into a few different groups. So we often talk about STAT. This was like the FANG of Asia. So that stands for Samsung, Tencent, Alibaba, and TSMC. And then there's another acronym which people talk about for the big Chinese internet companies, and that's BAT, Baidu, Alibaba, and Tencent. So let's talk about STAT first. Samsung and TSMC are a bit different because they're out of the trade war. You know, one is Korean, the other is Taiwanese, so they're not necessarily part of the trade war issues. So TSMC is doing very well. It's one of our largest holdings, and we think certainly on a long term, if you think of Internet of Things, that company is very, very safe, very sound. Samsung and a lot of similar companies in Korea, they've come down quite a bit because people are worried about the memory cycle. And the memory cycle has been very tight for about 2 years now. Some of these stocks like SK Hynix and Samsung doubled during that time. And there's some concern on the cyclicality there. So we still have a decent position in Samsung, but they're sort of stock-specific things, and they're outside of what's going on geopolitically. With respect to BAT, I would also put those in different categories. So Alibaba and Baidu trade as ADRs. So they trade in the US, they're not listed anywhere in China or in Hong Kong. And what you'll see happen very often is that when people in the US get negative on China, they just short Alibaba and Baidu, not because they know anything about the stocks or they care at all about the technology or the fundamentals, but because they're seen as China proxies for US hedge fund managers. And so you've seen that come through in their performance. Also, the RMB has depreciated about 6% from its peak to trough. And so for ADRs, which are obviously listed in US dollars, that's a direct hit on the share price. So that's sort of what's going on with Baidu and Alibaba. From a fundamental perspective, those stocks are still very, very strong. Tencent is sort of in its own little category right now because there has been some stock-specific things there. There's been a reorganization of the regulatory body in China that approves games. So these are online games on your phone. Obviously, this is a huge revenue generator for Tencent, and people are quite concerned that because no new games have been approved, that their quarterly earnings are going to be hurt by that. There's also some other regulatory issues in China around the health of children playing some of these games. And so Tencent has sort of been doubly beaten down, partly on the macro and the China concern and also on stock-specific concerns. At around 300 Hong Kong dollars, we think Tencent, with a medium-term view, is a very good buying opportunity.